Course. All right. So, what's good, everybody? So, I just kind of wanted to come on, and we're not really supposed to start the ongoing education this week, but I kind of just wanted to, anyways, come on, do a Q&A, and also break down some charts, maybe talk about just straight up chart work last time, because the last webinar, we were kind of all just introducing each other. So, that's what we do here. And then later on, you guys can actually go on the course and you can find the webinar on the course. But regardless, like all of that gets unlocked January, I forgot when, January 1st, right? So you guys will be able to see that there. All right, my screen stopped? Or can you guys?
The charting does not show now.
Trading view? All right, cool. Trading view here?
Yeah.
All right, cool. So does anybody want to ask me questions first? Because all I'm really going to do here, I didn't take this trade. I'm going to give you guys the fair warning. But what I'm doing to kind of slowly get back into the markets now is I'm just projecting where I see the market going and placing my risk-reward ratio tool on the chart just to see if my hypothesis was correct. That's all I'm doing right now. I'm not actually trading, but that's just how I'm slowly introducing myself back into the market, so then I can actually start trading live again, because I don't want my technical analysis to be thrown off by the time I get back into the markets in January. Because realistically, I haven't really traded since mid-November. I've taken maybe 2 or 3 positions since mid-November. But does anybody have any questions, anything they want me to cover before I start the breakdown, or would you guys rather do the Q&A after? Doesn't matter?
Yeah, it doesn't matter for me.
After's cool, bro.
All right, cool. So what I'm going to cover is this GJ position. I know we were also talking about GU yesterday also, but I believe I put it in the chat yesterday. The thing with GBP USD is that we've broken under, or we seem to be trading back under this level of resistance that we have here at 1.33600, right? Now, once price actually broke under, the best area for you to wait to actually go short on, again, is this level of resistance, because this is where you're going to find the most selling pressure. You got to think about it, or this is the way I think about things when it comes to market. There's specific levels that are more desirable to take positions from any time frame, really. But really, when it comes down to your more major time frames, like the daily and the weekly, right, you're going to find more liquidity in certain levels than you are just kind of randomly on your minor levels, right? So when it comes down to me overall looking to take a position here on GU, the first thing that I wanted to see was price actually retest this area and then wait for I'm going to say confirmation, right? Because it's never really confirmed that it's going to go down. There is no real confirmation, but that's just the best terminology I see fit. But wait for price to really just come test this area. And I want to see that sellers are actually interested in shorting this price range here, which yesterday we saw that, right? We had price come all the way up, and then notice how price came all the way back down, indicating that there is selling pressure in this area. Now that would have been this right here is the best area for you to actually look to take a short position. Now, when it comes down to GU, notice again the reaction. I think somebody had asked me when I was on the Discord yesterday, how do you determine your major levels of supply and demand? And this is how. Notice how essentially this is all within the same trading day, right? Notice how essentially price came up to this previous level of resistance, right? You can call it demand if you like as well, but I like to wait for a confirmation to actually say it's a level of demand or if it's a level of supply, right? But notice how price came all the way up to resistance, and then we had an immediate rejection and an immediate move down where we saw price come all the way back down to these previous lows. This is how I identify my more major levels versus my more minor levels of support and resistance. Now, once this first rejection had ended and price essentially, let me draw this kind of out here so you can see a little bit better. Once price actually started to trade above, that's where that's how you would want to really determine where price were to be moving next. So what we're doing essentially, if I were to place another horizontal line here as support, right? We're looking for different ranges where we could take potential positions from, right? Once price were to actually break above this minor level of support and resistance here, right? The next area for you to actually look for some form of indecision would be the next level of supply and demand or support and resistance, which in the situation with GBP USD would be up here. Notice how we also already have a sell confirmation here as well. This would be the best area to look to take a position from based off of the reaction that we got over here. It was a very immediate, sharp, and steep rejection to the complete opposite side, right? This is where I really would like to take better positions versus kind of in this area here, which yes, you could have taken a sell there because we're looking at it in hindsight. We've already seen what's happened, but this still also does look like a great sell, especially if you were to place like a Fibonacci retracement tool from this point to this point, clean 50% rejection, and we're also rejecting resistance. We have a nice sell signal. It just so happened to be that just wasn't the trade that played out in your favor. Now this obviously is a better trade, a higher probability trade because of the level that GU is trading at. Again, it is a more major level where if we look at the history of this level, time and time again, we've seen price reject this level and completely move in the opposite direction. Now that sellers have actually broken under this price range up here and we're trading around that area is where I would look to take price short again. Does everybody kind of understand that?
Yeah, that's clear for me.
It's good? It's good for everybody?
It makes perfect sense.
Yeah, it's good.
Now,
Yeah, I just have one question about the would there be any hesitancy about taking it? I mentioned that demand is kind of in control at this point on the daily.
say it again.
Are we hesitant to take 4-hour shorts at this point, given just because, but we're looking to sell at this area. It would be a valid sell, even though demand is kind of in control at the daily level.
Yeah, because regardless of what the daily looks like, we're still trading under this level. So as long as we're trading under the level, I would still be looking to go short. Once price actually starts to trade above, then that's when I'll start scrapping my short hypothesis on it. Really what I'm expecting though is I'm not really expecting much, one, because we're in the holidays, and two would be for this weekly candlestick to actually close, for the next weekly candlestick to actually continue to move bearish. So we may just consolidate around this area. One thing that you could do also is wait for the daily time frame to reject and have a daily closure under. That's another way you could play it. It's a little bit safer. But as long as we're maintaining as long as price is maintaining itself under the specific level, I'd still be looking to go short. Because right now what we're looking at here is price closed at this level. We don't know what the next day is gonna do, which would technically be this currently daily candlestick, because this current daily candlestick can come close bearish engulfing and the trade still be valid. And especially if we look at this structure, right, on the daily time frame, what we see is price forming lower lows and lower highs. And as of right now, this is our previous lower low point, where it's a previous level of market structure, which we could see our previous level of market structure still holding as resistance. This was the first rejection, right? What you could wait for again is that daily rejection, right? But I would take the position a little bit more aggressive, because if I were to wait for the daily rejection, right, then price may be trading somewhere down here, potentially even down here. What I'm doing by getting in at this level as close as I possibly can is I'm simply minimizing my risk while increasing my reward ratio. That's what I'm doing. That's how I'm comfortable trading. Everybody's going to trade this very differently, right? Even though we all may have the same bias, right? If I were to look for a long position, what I would actually wait for is a confirmed break above, a pullback into the level to see if that level will actually hold as supply or as support, and then for price to actually continue to trade higher from that point, where I'll take a position to go long here. But unless price shows me a break above, then I would still be looking to actually go short, especially with the daily time frame. I'm not really like a big relier on the moving averages, if that's how you want to say, but it's just like putting everything in together, and the fact that we're still trading under resistance is really what has my attention, and how prices rejected resistance on the previous days along with how this 4-hour time frame is forming, where we did see momentum kind of slow down, and now we have this evening star pattern, I believe is how people say it is. But to me, this is more like a bearish variation pattern. Now, it is a medium probability bearish variation pattern. But one thing we could do is also start looking at the lower time frames and how the lower time frames are forming. So notice essentially on this hour time frame, what we have here is rejection number 1. Then we notice buyers try and push price up higher, and then we have rejection number 2. Price continued to trade lower for a little bit, and then price pulled back up into resistance, and we have rejection number 3. If we were to go down to a 30-minute time frame, what we could see is that we actually have very, very minor support here. But notice how essentially support was actually being held, and now price is actually breaking under support. Notice how these candlestick wicks are actually getting lower and lower, and these candlestick highs are actually getting lower as well, indicating lower highs. You can even break it down to like a 15-minute time frame, see that this level of support is a little, or see that this level is a level of support a little bit more in detail, right? But now we can see price actually breaking under the support and waiting for price to continue to trade lower. Now, if I wanted to play it even safer, what I could do is wait like on a 30-minute time frame and wait for some form of a lower high to actually form. Because what we're looking at here with this trade is pretty much looking for a swing position with entering on the 4-hour time frame, having our stops this high above resistance. We're pretty much looking for a swing position. We're looking for this trade to play out within the span of a few hours. Now, notice how when we had this first rejection here, it didn't just go straight down to support, right? Of course, that's not always going to happen. Sometimes it will, but in this situation, it wasn't. This trade for it to go from resistance to support took 3 days and 16 hours. Now, if you'd want to play it more conservative, like I said previously, what you could wait for is that first lower high point to form, where we had here our initial rejection, a pullback, and then we had a lower low. So this would be where you'd want to wait for. You'd want to wait for a pullback where you would look for a sell signal again to actually take a short. Does that kind of make sense? I think I was talking maybe a little bit too fast. I hope I didn't lose anybody.
No, that was good for me.
You good, man?
Yeah, that was good.
A question on the profit target.
Yeah.
Where the current moving averages are on the 4-hour have anything to relate about the profit target?
Say it again. What are my current moving averages on the 4-hour?
No, the profit target you put to the bottom support.
Yeah.
Would there be any adjustments made to kind of like be like continuation kind of around where the moving averages currently are, like moving your profit target up? Is here? Yeah, something like that kind of makes me. I obviously much less risk reward, but I haven't gotten to the profit target section of the trading. But is there a specific? In this case, you would always go to that. That's
yeah. The thing about moving averages is we could use them as dynamic levels of like support and resistance. But really what I would rather focus on are price levels and we want to put different, how do I say this? We want to put different priorities to certain technical aspects of our overall analysis, right? So to me, supply and demand levels and support and resistance are always going to have a priority over the moving averages. You definitely could target the moving averages if you like. That's what I'm assuming is what you're asking me.
Just kind of more of the candlestick formations that the current averages are currently at.
Yeah.
But just, I mean, essentially, I mean, it's going to reduce the risk reward, but it's kind of like where in my head I would put my target.
Yeah, for sure. I mean, you definitely could do that. It's just, if you're also planning to target support, now let me ask you, how would you set yourself up to continue to hold the position?
I would just reduce the position sizing at that level and just continue the trade as a regular.
Yeah, pretty much. You'd close maybe half your position, maybe 80% of the position, whatever, is in your trading plan, move your stops to break even, or maybe even a 1-to-1 risk reward ratio. Because with this specific setup right now, you're looking at about 2.28. Maybe moving your stops to a 1-to-1 up here, not giving price too much room to breathe. Because the one thing that I'm opposed to is giving too much profit back to the market. But at the same time, it's all about balance. You know what I mean? You can't be too greedy with your stop loss, but you also can't be too forgiving, because then you're just giving money back for no reason. There's definitely many ways you could play it out. How I would play it out is my overall take profit would be this level of support, which is down here, which is more of a major level. As you can see, price has been consolidating around this area since November. What is that? November 30th. We've been consolidating around this area, right? So this is where I would target. I wouldn't place a target anything under this because we don't know if price is going to actually break this area. It may not. It just depends. But I would just trail my stops as well. Maybe even if I were to take a position now, I might even wait for a pullback. So I could take an aggressive position here. I don't know if anybody's gotten into like the scaling in entries portion, but essentially if I'm going to take an overall 2% risk on a move that I'm looking for, what I'll do is I'll take a 1% risk right now, wait for price to actually continue, and then look for a continuation and then take another 1% risk to have an overall open 2% risk. That's how I would play this specific way, this specific type of trade out, because I'll always take my more aggressive entry with a lower risk and my more conservative entry with the same amount of risk, just it's kind of a little bit lower instead of just going a full 2% risk in, if that makes any sense.
So
That's good.
How often or how long are you usually in trades? Like what's like your average time that you usually sit in a trade? 'Cause I know you're typically, like an intraday trader, but it seemed like you're doing a lot of swing.
Yeah, right now, because I'm focusing on swings. I'm trying to focus on swings as much as I can because I find that once I make an entry, I'm pretty good at holding a position for a certain amount of time. And when I look for swing trades, I'm looking for bigger moves, and essentially I'm looking for bigger risk to reward ratio trades. So I'm still trying to find a balance in between either or. But essentially, normally, how long I hold my positions for? Maybe like 4, 5, 6 hours on average, I want to say.
Because my question really was like, I used to watch you getting in trades every day, and I was wondering if we're, based our top down on the weekly, and a lot of the moves you're waiting on are like, daily candles and everything. Like how, like it's crazy how often can you get in a trade? If you're waiting on like a daily pullback, you know what I mean?
Well, essentially what we're doing is we're just looking to get in at our major levels when we're trading around those major levels. Because what I would do on a 30-minute time frame, right? This is a sessions indicator. We see that over here, we have the London session. Notice how in the London session here, we have support and resistance, right? Well, not even, let's do this, right? Let's actually draw a zone. So we're looking at an intraday time frame, right? Let's say price is trading around this range here. Right into the New York session. Let's pull into the New York session, right? So looking at this, my first reaction would be, okay, well, here we have an intraday level. We have resistance, we have support, and then down here we have support, and resistance throughout this entire range, and then we have our major levels of support here. The fact that price had obviously broken under support, we have the cross moving averages, and then we already have a break under, a pullback into resistance, and sellers are actually holding this previous levels of resistance. That would be key for me to actually look to go short. Now, where could you potentially go short to? There's many levels that you could look at, like you have this area here, but really I would just always focus on like my more major levels being on like a 4-hour time frame, right? So essentially I would still target this area down here. Now, when it comes down to looking for an entry, everybody's going to enter the market very differently. You have multiple entry methods, right? Let's continue. So here we have a medium probability bearish variation along with the break of support, along with the crossover of the moving averages. Then if you go to the 4-hour time frame, we know we just rejected a major daily level of resistance, and we potentially even have a 3-leg extension here because we have a high, then I went to low, then I went to lower high, then a lower low, also confirming a bearish trend here on this 30-minute time frame. So I've just put all of this together and looked at the probability of this specific trade is a lot higher to go down just because of the way this 30-minute market structure is forming. Now, everybody's going to trade this very differently. Let's just say you were to take a position here, right? What you always want to do is place your stop loss above a level of support or above a level of resistance. And then let's look to target down here. So that's about 4 times our risk. I would be a little bit more generous with the stop loss, look to gain maybe 3 times our risk just to give price a little bit of room to breathe. And then everybody would take that trade not fairly differently, but the way people would actually enter the market and wait for more confirmation, it varies trader by trader. That's how I would have looked at it from an intraday perspective. Essentially, I have the same overall top-down analysis, but that's just the way I would have taken it from an intraday perspective. And if you would have actually taken, or if I would have actually taken this trade live, right, this trade would have still ran me 2 days, right? But I took it from an intraday level. Does that make sense?
It makes sense.
Just on the stop loss, your stop loss there. Is it just that the rectangle zone for the key demand supply at that level? Is there any like reason to pull your stop down above to the level to the rectangle?
Up here?
Or is it no to the bottom where
Here.
price currently is? Yeah, is like that's obviously a really tight stop, but is the kind of the breathing room just putting it to where?
So
just a little bit to give it more room, or is there just like a pip amount, or just kind of like where you're seeing
whatever is comfortable to you as a trader, and as long as you don't eat up too much risk to reward. Like if I wanted to be a little bit more greedy with the stop loss, then I would have put it here and I would have gained 4 times my risk, right? But really, it's up to the trader. I like to be a little bit more generous with my stop losses at times, because there's often times where you could take a trade like this on a break and retest setup where we see price go above the zone, but then continue to actually trade lower. So really, it's up to the trader's discretion at the end of the day.
I've got
especially like
something.
My bad, but especially like you got to remember when a lot of people are looking at the same position, there could be liquidity grabs, and if there's $2 million in stop losses, like let's say at this area here, and there's only like $200,000 of stop losses up here, if there's going to be a liquidity grab and manipulation, they're going to go for the 2 million and then head back down. There's no reason to go really for both, right? They're going to go for the bigger chunk. So I try and find stop loss areas that would really save me from those positions, especially that I'm only sacrificing 0.5 risk to reward. It's not really a big deal to me. 0.5 risk to reward, just to give it a little bit more breathing room. But like I said, again, it's up to the trader's discretion at the end of the day.
Bro, I've got a quick question about the entries in terms of the engulfing candles.
Yeah.
I usually trade the lower time frames, so the 1 hour, 30 minute, 15 minute time frames.
Okay.
But obviously I look for the 4H and 1H for market structure and direction. Now, sometimes I find myself in a position where I jump the gun. Let's say I see a level of resistance and I see a bearish engulfing on a, let's say, 15-minute time frame, and I take it as a short, but then the price goes against me and then I get stopped out, then it goes back into my direction. So my question is, do you wait for a higher time frame sort of bearish or bullish engulfing before you enter a position, or can you use a lower time frame?
The thing is, if you use a lower time frame, you have the probability of exactly what you just said happening, because the higher time frames haven't formed yet. Remember, the higher the time frame, the higher the reliability and the higher the probability of price going in your direction. Now, it doesn't mean price is always going to go in your direction, but there's a lot of noise on the 15-minute time frame. And personally, when it comes down to me, I would like to wait for at least a 30-minute or an hour candlestick confirmation or a candlestick pattern for me to make a real decision on whether I want to enter the market or not. Because just like this example here, right, you have the 4-hour engulfing, but it didn't go in your direction. That's just, it's going to happen at times, right? But if you would have entered maybe like on a 15-minute time frame, there's a lot of noise. You could see engulfing here, variation here, another engulfing there, variation here, right? You kind of want to clean it up by focusing on a little bit of a higher time frame. That's just my personal preference to it. I personally I recommend just, if you're going to be trading and looking at intraday levels, I would focus more on intraday time frames.
Yeah. Okay.
When I was looking at this 30-minute time frame and I was breaking down this position here, I waited on the 30-minute. I didn't drop lower than the 30-minute.
Okay, perfect.
Hey, I have a question about the moving averages.
Yeah.
Are you ever going to consider getting rid of them and then just trading pure price action?
I may actually just get rid of one of them, being the 20-day moving average. But the only reason I use the moving averages is to determine the actual volume that there is on a specific trend. So I know once price breaks above the 21 estimate, we've broken above the 21-day moving average. And if price breaks above the 50 estimate, we've broken above the 51-day or the 51-day trend. So I like to have them there. But maybe in the future, I would potentially, because I'm focusing really on just certain price action levels, certain levels of supply and demand, certain levels of support and resistance. I'm not too focused on the moving average at times. And at times I do find that the moving averages kind of gets in the way of me reading the candlesticks. So I don't think so. Not any time like soon or in the near future.
Interesting. Okay.
Are you going to be swing trading from now on, or is it only intradays that you're going to be doing?
I'm probably not going to be swing trading from now on, but I'm going to continue to focus on trading from level to level. If I find an intraday opportunity that's level to level, I'll take that intraday opportunity. If I find a swing position that is a cleaner trade, then I'll wait for that swing position. But to me, it's what looks the cleanest, right? I'm only trying to take the cleanest setups possible to minimize my risk as best as I possibly could.
Right, and can you go over like another intraday trade?
Yeah, that would have been the trade on GJ that I marked up yesterday. So when it came down to GJ and why I would have looked to actually take a buy position here really comes down to the levels that we're trading at. So first things first, you want to come onto your charts, practice your top-down analysis. First thing you can identify is supply, 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 supply. Price, time and time again, has rejected this level of major supply. Notice every time price came into there wasn't much consolidation, but more of just a big reaction to the opposite direction. Now, one thing you can identify one thing you can determine after identifying supply was once price rejected this area, where did we go next? And to me, I determined that it was this level that I have up here, which is the same thing. Price failed to break above this level time and time again. And right after price rejected this level, it kind of just bounced within this range. So I've built a level of support and a level of major resistance, and I built myself a range. So I have I don't want to say like directional bias, but I am expecting price to do one thing. So essentially what I'm looking at here is if price comes down to support and rejects support, I'm going to look for price to go up to resistance. If price rejects resistance, I'm going to look for price to go down to support. Now, it'd be a different story if price were to break support. If price would actually break support, I would look on the higher time frames for the nearest level again, which would probably be right here, 147,933. If price were to break resistance, I would look for the nearest level again, which would potentially be up here, 153,446, right? But until that happens, I'm not looking for anything above or under this range. Now, when it comes down to looking at why I would have taken or looked to take in a long position, really comes down almost entirely to the daily and 4-hour time frame. But I took I would have looked to take in an intraday position based off of this move here. So essentially what we see is literally what I just said. Price came down, rejected support, traveled up to resistance. Price met selling pressure at resistance, came all the way back down to support. So we've identified that price is bouncing in between this range. Now, notice how momentum significantly slowed down here. Notice how there was strong bearish momentum here, and notice price significantly slowed down once we actually came into support, grabbed liquidity, and price closed very weak, right? That was the first sign of rejection. This was the first sign that price may actually continue to trade higher from this area. Sellers were met with buying pressure, right? Then what gave it that, in quotations, confirmation was notice this big bearish candlestick. Notice how bullish candlestick, right? Notice how price actually closed within the top third from the open to the wick, indicating that it is a very strong candlestick, that there wasn't much selling pressure in that candlestick. Also notice how there's almost no wick to the upside. This is pretty much one of the strongest bullish candlesticks you can have. Notice how big the bullish candlestick is as well, indicating that there's a lot of volume in that bullish candlestick. It's not like in a situation like this where there's a big bearish candlestick followed up by another big bearish candlestick. It's a big high volume bearish candlestick followed up by a candlestick that lost a lot of volume, where again, sellers were met with buying pressure. This was the first indication to look to actually buy. Also, along with that, you go to the 4-hour time frame, and what we could see here is that we have resistance, resistance, support, support, support. Price broke above resistance. The best thing for you to do, again, referring back to the course, is looking for a level of support and resistance to take a position from, so you have an area or you have a specific level that could protect your stop loss. Now, once price actually ended up closing back above resistance, all I simply did was wait for price to come back down into support and wait for support to actually form, which this was the entry candlestick I entered right after this 30-minute candlestick, which didn't really go in my favor right away, but it's just going to happen. You're not going to always have trades that go in your favor right away, right? Now, when it came to the stop loss placement, again, I wanted to be very generous with my stop loss because I was looking to gain 3 times my risk anyways, right? Sure, I could have put the stop loss a little bit tighter, maybe even, tighter than that. But I overall wanted my stop loss to go under all of these wicks here, right? So that's why I had placed my stop loss somewhere down here in this range, especially with the markets, how things are going on. I've seen really big wicks. So I want to avoid getting wicked out of the trade early. Now you have to ask yourselves, I'm going to look to enter at this level of support. If I take a trade at this level of support, where's my stop loss going? Where's my take profit going? This is a decision that you have to make pre-entry, because when you have live money at risk, you're no longer thinking as logically as you possibly can when you have live money at risk. So you want to do that before you actually take a position. To me, I determined the next area that price has a high probability to travel to would be this major level of resistance up here. And price pretty much just went directly up there, and that's how that position would have ran. So does anybody have any questions on that breakdown?
Yeah. When it comes to taking a trade, do you always take them during a certain session?
Most of the time I try my best to. Sometimes I'll take it before session, like this was like maybe 1, 2 in the morning, if I recall correctly, London session, right? A little bit before that. I try my best to, but when price is trading at a specific level and we're not that far away from session, I'll take an entry, because I know session's either going to push price in my favor or against me, especially if we're only like an hour, maybe even 2 hours away from session. Again, it's very situational.
Oh, okay. So if you see a setup outside your trading session, you would take it once the confluence is there.
Definitely not like during Asian session. Maybe like at earliest, probably like 12:40, 1 o'clock is when I'll take an entry. I try not taking entries outside of that time. It depends, but you always want to wait for session, especially if you're just intraday trading, because no volume, there's going to be no movement in the market. You're going to get stuck in consolidation. Sometimes I take an entry before session, I get stuck in consolidation, and then price pulls back against me and then gives me another entry signal, maybe pre-market hours where I could have entered there, and price, I would have just avoided all that consolidation.
Okay.
So I had a question.
Yeah.
Actually, yeah, go ahead.
And if you see no setup during a session, you just wait for the next opportunity when you might see something again.
Yeah, for sure. If you see no setup during your session, that's why you can have a watch list of maybe 2 or 3 pairs. If there's no setup on one pair, just check your other pair in your watch list. If there's no setup on any pairs, then it's just not a day to trade. Don't try and just force a trade.
Okay, thanks, bro.
I had a question about an entry. So based off this specific entry, would you have like other cases where you wait for after the bullish engulfing? Do you wait for a 50% retracement and then enter
Um,
instead of like going into drawdown like immediately? I know it doesn't occur like every time, but have you ever thought of that?
I would much rather wait for, because I like to enter at levels of support and resistance. Like the thing about fibs is the Fibonacci retracement tool simply just tells us how far price is actually pulled back. Now, why we use the tool is because we want a significant discount in quotations, right? To actually take a trade. We want price to pull back enough to where the risk to reward ratio makes sense. I don't believe that fibs is like a level or different levels of support and resistance, right? That's why I try my best to never use fibs alone, because if I find myself taking a setup solely based off fibs, I tend to lose them. I'd rather use fibs in confluence with a major level of supply and demand or a major level of previous structure. But in my trading, I would much rather take the entry at that specific level of support or resistance that I'm looking at, because again, the market moves solely based off of supply and demand. So that's where I would put my priorities to. I would much rather put my priorities in looking for trading supply and demand rather than fibs. And again, I would never use fibs like alone. Like if you would have waited for fibs in this situation here, you would have probably never even taken a position.
Actually, I meant like, so let's say after the bullish engulfing of this signal entry that you take,
This one?
you see how the next bearish candle retraced like 50% almost?
Oh, okay. I
Yeah,
get it.
yeah.
So you're talking about doing something like this.
Yeah, something like that.
No, I've never tried that. I have heard people talk about it, but typically those people that are doing that are trading a daily time frame.
Oh, okay. Yeah, because I like from my back testing, I would see like it doesn't occur all the time, but when it does occur, then you could just avoid the drawdown and have a better entry. But
The thing to me is like, I don't really care ultimately about drawdown because I know I'm not always going to be right and price isn't always going to go in my favor right away. To me, what's more important is stop loss placement. Is my stop loss in the right place to where if my stop loss gets hit, I'm ultimately just wrong and I want to close my position. Like, regardless of the fact, if you in a logical state of mind are like, this is where I want to get out if I'm wrong and I'm okay with losing X amount on this trade, right? What happens in between shouldn't really matter because typically when you're trying to avoid like things like drawdown, well, at least in my situation, is because I'm using a very big lot size that may be outside of my comfort level. And when you're trading outside of your comfort level, you tend to be more emotional. That's just been in my experience personally. I don't know about your experience, but I tend not to worry about like, oh, I mean, my position might get in drawdown. Like, it's fine. I don't care if my position gets in drawdown. To me, what's more important is my stop loss in the right place to where if my stop loss gets hit, I'm just ultimately wrong and I want to close the position because price could just fluctuate. I mean, the market's always going to fluctuate. Now, yes, is it nice that there's some trades that go just straight into profit and never see drawdown? Yeah, those are like the nice trades that may stand out to you, right? When you actually, take a trade. But to me, ultimately, like if drawdown occurs, it doesn't really bother me because I know it's part of the process.
okay, thanks for your insight.
Yeah, no problem.
One more question.
Do you know?
What's your like cutoff time for trading? Like your latest time you'd be looking to take entries?
Latest time?
Mm-hmm.
Sometimes there is no late time. Like when I used to trade London session, sometimes I wouldn't get an entry till maybe 5, 6 in the morning. And I'd just be up waiting for my entry the entire time. I mean, as long as it's different though, because if it's in the New York session, like, again, it's very situational because I can swing a position. If I see my entry at 12 o'clock, I may potentially take it.
Money?
I'm not scalping.
Okay. It's
But
situational.
$30?
I definitely try my best to not take trades like past.
This one right here. But I just put in a bunch of stuff.
What's up?
Oh, sorry, I was talking to my mom. Sorry.
Nice.
I didn't know I was muted.
You're good, bro. Anybody else have any questions?
Raul,
Yeah.
like sometimes if like the 30 minute is engulfing like at a height, like if it's not at a good entry, would you wait for the next candle low, or what would happen then in that scenario?
So if I'm waiting for a specific engulfing candlestick, right, and price just moves too far away where the risk reward doesn't make sense, I won't take that trade. I'll wait for a better entry where the risk to reward makes sense. Not because I'm trying to avoid drawdown or anything, but simply for the risk to reward purposes.
And like if you don't find any entries for like London session, would you like transfer it to New York, or what would you do in that?
I would potentially wait, yeah.
You would like go to New York session?
Yeah, I would wait for the New York session as long as the trade is still valid. That's what's important. As long as the trade is still valid, then I'll wait for the New York session to play out. But that's another reason why I'm switching over to the New York session, is because a lot of the times London may push price in my favor, but then by New York it'll pull back and then continue higher. In this situation here, like the New York position is probably like this one right here, where you see a little pullback and a continuation. I wouldn't have taken a position here, right? But London is just GJ is more of a London pair than it is a New York pair. But gold is a little bit differently, or silver is a little bit differently, right?
So are you trading only gold or silver, or what, for 2022?
For 2022, I'm predominantly going to focus on gold, silver, and the S&P 500. These are the two pairs that I want to focus on the most.
Is the S&P 500 for New York or London?
New York.
Yeah, all right. Nice.
Yes.
Raul,
Yeah.
I was gonna see if you can make me a panelist, and then the other question is, where do you think GJ is going now? What's your opinion? Because I was thinking some sales, but yeah, I think I might be ready to enter too early. I don't know.
It depends. What is it? What's today? Wednesday? Thursday? Today's Wednesday. It depends, because you could look for shorts, but the way this volume is playing out right now on GJ, it looks like it could continue to break higher. You go to the daily time frame. The daily closed inside of the zone, not giving us too much detail. But the one thing to take into consideration of previously is the rejection support and for this level of resistance. For me to actually look to go long, I would want to wait for a break above, a pullback back into the range, and then look for price to actually trade higher. For me to look to go short, I would want to see a transition on like a lower time frame, such as a 30-minute time frame, very similar to what GU would be presenting. But you could see this 4 hour right now is not telling us much. The bearish volume, there's not much bearish volume here to begin with. So a signal to actually look to go long would be maybe like a bullish engulfing in this area. But then again, you're still trading inside of resistance. So I would definitely just wait it out on GJ. If you're looking to go short, then I would wait for a better sell signal in the 4 hour time frame. It all depends, really. In a situation like this, I would wait it out.
Ryle, what would be a sell signal when, let's say on a 4 hour time frame, that would determine if you would take the sell? What would you look for to take the sell on the 4 hour time frame for GJ?
Well, if we look at GJ, what we could see here essentially is, notice on this 4 hour time frame, price came back up to its previous 4 hour highs. Notice how it's rejected the 4 hour highs, right? What I would then do is go down to a 30-minute time frame, and let's open up the sessions indicator, right? So we have, this is the Asian session, right? The end, where this red zone ends should be roughly like 5 o'clock. So in the Asian range starts, right? So we have the Asian low being here. We have the Asian high being here. Approaching London session, I would wait to see what happens. If the Asian range or the Asian low gets broken, we may see price actually continue to trade lower, because at that point in time, we've broken under the Asian low, which indicates that we've just made a lower low. If we break above, it'll simply be that we've broken above the previous high, indicating higher highs if we break above this resistance here. So it's kind of like, you'd want to wait. Is support going to break, or is resistance going to break? And then how are you going to do it next? Are you going to take an impulsive entry, and take a breakout trade, or are you going to wait for price to pull back, retest the Asian low where you can then look to go short? But sometimes that's not going to happen. Sometimes you're just going to see price break, continue to trade lower, or see price break and continue to trade higher. In a situation like this, I would probably wait for the break, where we'll then get a nicer, stronger 4-hour confirmation, and then maybe look to take this trade lower. Because the thing is, like on the daily time frame, yes, there's a lot of momentum. Buyers are still holding price very well. I would probably want to wait to see what happens on this day, especially like now that we're in the holidays, right?
Mm-hmm.
Yes, Raul.
Basically, a break of structure and also price action.
Yeah, I would wait for less. Because if we look at it, right, like we have this day where it made a lower high, then it came down, made a low, right? Then we have higher high. Then we have a low here, right? And then now prices at the highs again. So I'd be very curious to see what happens in a situation like this. There's nothing to do other than wait. It's still very, very early. It's like 10 p.m. It's too early to make a real decision.
Okay.
You always wait for the retest, Raul?
What's up?
You always wait for the retest, the support or the resistance?
No, not always. Again, it's very situational. Like if I would have seen GJ like do something like this, right, where we had an immediate rejection, a pullback up into the range, I would be looking to go short, right? In a situation like this, right, it may be, let's take a look at that on the 4-hour time frame, right? Notice how there's no real volume, but then when volume came in, it's too late to actually take a position, right? Let's break it down to an intraday time frame. You see what I mean? Like we have a big rejection and a movement away, indicating that volume came in and that there's actually selling pressure here, right? Notice the difference between this type of price action and this type of price action, right? It's not much, right? There's a big difference back then on how price rejected this area here versus now. It's kind of just consolidating. When price is consolidating, it means decisions are being made. Now, you in a situation like this, definitely would need to wait it out, right? If you take a trade here, it's just I can't determine right now what side has a higher probability, just simply because of how this bullish volume approached this level of resistance, right? I would definitely wait this out. Then I would take a look at it again pre-market. But as of right now, again, same thing as GU. As long as price is maintaining under resistance, I'm going to maintain a short bias. Once price breaks above, then I'll look to actually take buy positions. Because again, you want to sell support. You want to sell support. You want to sell resistance, buy support. Sometimes, and that's the thing about being a trader, is just you have to make decisions based off of what price action is doing. I could be saying, yeah, we're 100% selling right now, but in an hour, I could be like, yeah, we're most likely going to buy. So it's very situational.
So it's basically adapt to the market, but like you can't force the market to do what you want, right?
Of course. You have to adapt to the market conditions. And that's why we always set like a pre-market analysis time, so we can come in as close to session as possible and make the best decision possible. Because you could look for shorts right now, and then by the time London session hits 1 in the morning, 2 in the morning, things completely changed. There'll be a big bullish candlestick trading up here. You're like, oh shit, yeah, completely forget about selling. I'm gonna wait for price to pull back into support, retest, and I'll look to buy. It changes. You gotta adapt.
Hey, Raul, so with your strategy now, I'm pretty sure you didn't start out just on supply and demand and the same strategy you're doing now. But what if you had to choose 3 pairs, knowing what you know now, what would you go with?
Bro, I'm gonna be honest with you. It really doesn't matter. What matters is how well you read that specific pair, how well you understand how that pair reacts to certain levels. That's what I would say matters the most.
Okay.
I have a question.
Yeah.
Oh, okay. Well, thank you, by the way, for answering all these questions. I know they're kind of a lot, so thank you.
That's what I'm here for. This is what I signed up for. So.
Right. Okay. So my question was based off of London session for GU last night. How would, and when you're doing like a pre-market analysis, like if you were like at 9 a.m. this morning, roughly, right? Pre-market analysis? Or no, is that too early?
9 a.m.?
Yes.
That's too late because New York session is 8 a.m.
So for London session though, like if you were trying to see, yeah, from last night, and then if you were trying to see this morning to pre-market and analyze for tonight. That makes sense.
I'm kind of, so what you're saying is how would I analyze this for later tonight?
Mm-hmm. Like, would you analyze it in the morning at 9 a.m. to kind of get an idea?
No. So, what you want to do is analyze at 7 a.m. to trade at 8 a.m. for New York session. If you're going to trade London session, you would analyze at 1 a.m. to trade at 3 a.m.
Oh, okay. Gotcha.
Yeah. Because like you're going to have different setups, right? So essentially during London session last night, this looked like a short to me, right? And then once price broke above, which you guys can see, I stated in the Discord, if price were to break above, then we're going to continue to trade higher, where we'll look to sell somewhere maybe along this area up here, right? Now you come back into the market, let's just say 7 a.m., which this is going to be the London to New York crossover. So this bullish candle is 8 a.m., right? It comes back down to the same intraday level. Notice the break above. Notice how price came back down. Notice the retest. Notice how price had rejected and then engulfed. This is where I potentially would have taken a buy position up to this area here. Time passes by. Let's say New York session comes in. I may look for a sell up here in this range.
Okay. Wait, that up there where it was consolidating is New York session, or is that?
Yeah, up here. So this brown is going to be the London to New York crossover, right? And then the red is going to be like kind of where the New York session dies down. But where the brown starts is New York sessions, 8 a.m. But it's referred to as the London New York crossover because its London session is still active.
Okay. All right.
Raul, it's safe to say that you don't really wait for a retracement to enter. It just, you enter when you see a setup.
It depends, bro, because in a situation like this, I would have taken this position based off of this retest of support. So this is a setup of buying support, right? If you're a scalper, then you would have been like on a 5-minute time frame, and you would have seen, hey, we have market structure highs, market structure lows. Mark off the lows being down here, mark off the highs being up here. You would have seen price break above the highs, bounce off the highs, and then continue to trade higher. You could have taken a buy off of that. But I focus mainly on supply and demand, support and resistance.
Got you.
Raul?
Yeah.
For the indicators, the session indicator, it's just an indicator, right? Like I could just look it up.
Yeah, just go into indicators somewhere up here. Yeah, indicator templates, and then just look up sessions.
All right, thank you.
So Raul, how you feel about like let's say you do your analysis on 4 hour, right? And your entry time frames is like 30 or 15 minutes, but you set your take profit on the 4 hour time frame, not the 30-minute time frame.
That's fine. I mean, as long as your stop loss is adjusted for the 4 hour time frame.
Okay. So where would you put your stop loss? Would it be like on that time frame, or would you also do it on the 4 hour time frame?
My stop loss will be based off of the 4 hour time frame.
Okay.
Yeah, because it's most likely you're taking the trade based off of a 4 hour level of support or 4 hour level of resistance. So I would base it off of that time frame. I wouldn't base it off a 30-minute time frame. Unless I'm trading an intraday level that the 4 hour time frame is also in sync with.
Okay. So also like certain like okay, so it's like a setup where you would add on a little more risk than a B setup. Is that something you do?
Yeah, for sure, 100%.
Got you.
Thank you, Raul, for all the questions you answering.
What's up, bro?
my question was, what would you advise to the people who don't got time watching their trade? For example, like before, I used to enter a trade on the London session, and then while I was in profit, and then the New York session they stopped me out because that time I'd be working. So, what do you advise like to the people who don't got time?
Take profits.
Yeah, you can take profit. What time zone are you in?
In the London session, usually I be in the London session, and then the New York session I got stop out most of the time.
I mean, can you dedicate yourself to trade the London session and be on your computer and actively monitor the trade during the London session?
Yeah, but probably before the London session close, I'll be at work.
Before the London session close, you'll be at work. So like New York session.
Yeah.
Yeah, so you could dedicate your time to just trading the London session and closing the position. I mean, the fact that you don't start work until like the New York session is pretty good, because then you could just dedicate your time to trading the London session and then close out of a trade before you go to work. So really you have two options here. You could look to take short-term trades where you're pretty much scalping, where you're in and out within the same session, or you could look to take swing trades where you're taking trades more at major levels. You're going to take, I mean, both of them have their pros and cons, but it doesn't require you to be on the computer or actively monitoring your phone every hour. You'd be monitoring your trade every 4 hours per se.
Okay. Thank you.
Raul, quick question. So if you're trading gold, do you look at like the economic drivers first? So like for like CPI, PPI, and non-farm payroll, do you look at those like economic drivers to see like what's going on with gold and the USD?
I try and base my trades solely based off of like price action. But when it comes down to like non-farm payroll or any news event that's relevant, I try and not trade that specific day. But then you got to look at things like if you're going to take long-term positions, right, you got to look at things such as like inflation and what's going on with the economy. If the government's printing more money, you definitely would want to pay attention to things like that. But since I'm really looking only for intraday moves, in a long-term perspective, it's never really affected it that way because we would be able to see it on the chart. Now, we're talking about if a big news event were to happen where another article comes out, the government's going to continue to print trillions of dollars, then, you would have to take that into consideration for sure when it comes down to your trades.
Got you.
Do you ever look at sorry, go ahead.
You're about to say if I ever look at the DXY?
Yes, that's what I was going to ask.
I don't.
Okay.
Raul?
What's up, bro?
I have a question on gold.
Yeah, bro, it's good.
All right, so basically I got my key levels, and I marked up for level on 1800 on a daily time frame, and I see that previously, right now, price is trading above 1800, but it's a whole bunch of wicks and stuff. Like I'm looking at in the past, price it closed above, but it wicked right back underneath that zone. And right now, I'm looking for a continuation based off like my fib and my projections based off a target from earlier position.
Mm-hmm.
But I just want to know, because the low time frames is just pushing right now. There's no pullback in that. Yeah. And I just want to know, like, because I got out, and before I enter again, I would want to pull back to happen.
Sure.
So I just want to, I don't know how to play right now going into London.
So in a situation like this, right, what I would focus on is notice how every time price broke above this 1795 level over here, right, I would wait for price to, first of all, I want to mark this off here on the daily time frame because that's important. The previous daily, not high, but the highest close, which is here. right? In a situation like this, once price actually broke above 17.95, it traveled right to 18.13, where we see the majority of these wicks fail to continue to go up, where we see selling pressure. So in a situation like this, I look at a lower time frame, see what this horizontal line looks like, and to me, it's right here at about 1800-ish. So what I would wait for, and this is just me, I would wait for price to pull back into this range, where I would wait for price to form support. If price can successfully form support, then that gives me the confirmation that I'm going to look to take a long position, where I'll look to buy, let's just say around here. Then I target this area up here. Then my stop loss is going to be under this high right here. So maybe I don't want to give it 4 times my risk. Maybe I'll do like 3.6, especially with gold. Gold could throw big wicks at times. So I'll look for like 3.3 times my risk here. So risking, what is this, 40 pips for 130 pip gain? This is how I would do it. This is taking the trades off of the more major levels, especially like there's a reason why price pulled back into this zone and then it had this huge reaction. It doesn't happen for no reason. There's also a reason why price came into the zone previously and initially rejected it. So this is where I would base my trade from. This is a more major level here within this intraday time frame than this one right here. This is what I would wait for. But then again, if you wait for price to come all the way down to here, because this is a 4-hour level, as you could clearly see.
Yeah. Based off the daily time frame and like drawing zones on a daily, like I usually look for like whole numbers. And if you're going to daily right now, I usually try to draw my zones like catching most of the wicks. And yeah, like see around how 1800 is a whole bunch of wicks around that area. I marked that off.
Yeah. I try and do that also, but I focus more like on the price. Like to me, like putting my level right here looks a lot cleaner than at 1800. So I put it right directly at 1800, right? I'm missing this area here. Like this area looks like an overlap. I'd rather put it somewhere where there's like a little bit of a median. So maybe somewhere along here would probably be best for me. Everyone's going to do it very differently though.
Yeah. And you don't ever like it's no like spending time that you like cut out. You mostly look at all previous like history from the data in the past and like basically mark that off. Like you don't cut out any data like so where you would be analyzing from too far in history. Like
no, because this is all relevant price action right here. Like what happened in like the 1900s doesn't really matter to me.
Not too far back, like around there, but
yeah, to me it's like it's all relevant price action. What relevant price action means is all right here.
All right. Yeah, that's all right, cool. Thank you.
Yeah, bro. Of course.
Raul.
What's up, bro?
Yeah, I had a question. I actually took a position on gold, and I kind of just wanted to pick your brain how you would go about it. Because the problem is, I went up like 140 pips in profit. So what tends to happen with gold is it'll go up a lot, and then like I'll find like I won't find myself like I won't know how to manage it, sometimes because it just moves so much. So my question is, what happened?
Well, how much was your pips and how much was your stops in pips?
Okay, so my stops were, this is the thing, right? My stops were 97 pips, but the take profit was at 1830. So it was like the risk reward was like it was like a 3 to 1 to 4 to 1. The thing is, I realized that we were at a daily resistance, and what tends to happen is that I'll be up a certain amount of pips, I'll move it to break even, and it'll come all the way back down and then move up. It'll move up my way again.
Yeah, the thing is, like, if your stop loss was 97 pips and you were up 148, like you're barely at a 2 to 1 risk reward ratio. So it's kind of like, okay. So can you explain that to me again?
Okay, so like you see that first engulfing there on the H4?
Right here?
The other one. The first one, on the first drop.
This one.
Yes, I entered off of that one.
Okay.
And I had placed my stop loss a little bit under the 50 SMA. but the take profit was at 1830.
Up here, okay.
Yeah. So what I realized is at that daily level, if you look back, not so far back, price tends to like kind of like go to that level, come back, kind of consolidate in between that range. So I consider closing it early.
Right
So
here.
I'm just asking, like, basically, how would you have, like, if you would have taken that position, how would you have would have went about it?
I would have taken this buy position.
Yeah, if you would have taken it, right?
The thing is, I'd have to look at the daily, what it looked like there. So let's look at the replay. Let's look at before that. So this is the daily. This is the 4 hour. Yeah, like I wouldn't have taken that buy position because if you look at the daily like this, you go to the 4 hour. Is your entry on the next day? Let me try and figure this out.
Yeah, right there on that candle.
So you entered here, okay.
Yeah.
Then yeah, I actually would have looked for a buy position because we would have seen price break this area. We would have seen the rejection here. 4 hour time frame. The thing is, the 4 hour time frame never came down into the level.
Yeah, that's kind of what I realized, because that was when you throw the fib, it was at 38.2. So I kind of just noted that it could have came down lower, but luckily my stops were placed at my plan, like for gold, is I placed it at the stop. I placed it at the next Fibonacci level.
Yeah, the thing is, gold, this is a very choppy. You see now prices in the level,
mm-hmm.
right? Because I would have waited. Not to say that I could have. Again, it's very situational. I don't know exactly what I would have done. I need to be there in the moment, ready to risk money.
Okay.
But essentially, this is how I would have had it drawn, right? And I would have waited for price to come and actually test my horizontal line where it would have been the highest close. That's important, right?
Okay.
Then, looking at this here, an entry would have been too far away because my target would have at least been potentially here to 1813 at most. Why 1813 instead of 1830 is because look at all the rejections we had every time prices reached 1813,
mm-hmm.
right? Especially that being the previous daily high. That would have been my targeted area. And then there's no entry here because that's not a good entry signal. There's still no entry there. Then this is where you could have potentially looked for an entry after that double bottom pattern.
Yeah, that's why I was looking for a second potential entry in the lower time frame double bottom.
Yeah, this is the double bottom right here, right off of
mm-hmm.
our daily level of resistance where we have our previous daily high. This would have definitely been the better entry. And if you look at it from like an intraday perspective, I don't know, it's just so laggy. If you look at it from
it would have been a better risk reward.
Right. You could
mm-hmm.
safely place your stop loss under this low right here. How many pips is that? Let's do a little bit bigger. 40 pips. Let's see what this would have been. So this would have given you just about 2 times your risk, which is fine.
mm-hmm.
But then essentially like my main target would be the high originally, which would be up here. But then if I would have originally targeted the high up here, I wouldn't put a stop so tight. I would be putting a stop loss a little bit bigger. Yeah, right here would have been perfect, right? So 4 times our risk is what we would be looking at. Yeah, I wouldn't have taken this entry here just because of how close we are to this resistance.
mm-hmm.
And price didn't actually come into my daily level, which is something that I take into consideration as well. I definitely would have looked to buy.
mm-hmm.
If I would have gotten stopped out here, if I would have bought here in this area, right? But the thing is, I wouldn't have even bought here to begin with. I would have bought in here. Let me check the time. Yeah, I would have probably bought here. That's if I'm trading the London session.
mm-hmm.
I would have probably bought here. But the thing is, it depends though, because if I'm trading London session and I would have seen price do something like this, I would have probably looked to buy. If I'm trading the New York session, I would have actually looked to sell because our structure was bearish, and then we're at 1797, which is a major level. Regardless of the fact, though, if I would have taken a loss here on a buy, I would have taken another buy right here.
Okay. Yeah, that's kind of how I kind of understood it. But yeah, thank you for clearing that up. It makes a lot of sense. I see where I went wrong about it.
What would you say you went wrong?
Well, I think that it was the timing, like my level, how I drew my level. Because when I drew the fib, it was at a 38.2. I had placed the order, but then looking back into it, I was like, wait a minute. I still kept my position open, and I was like, if I get stopped out, I get stopped out. But there's a high probability it's gonna go up. But since I entered early, I could get stopped out. So once I saw price like just dip down and kind of like hold at that 50 SMA, I just kind of just held my position and I just didn't panic, you know.
Yeah.
And
So
I
you're
noticed
still in
that
the trade.
that double. No, I took it out. I took it out at that point because the
Right
thing
here?
is, I took an earlier trade that I was up like 50 pips and it took me out at like, break even, and it was like, oh, I feel like I'm not capitalizing on the gains, you know?
Yeah. This would have been a tricky situation for sure. But if I was in your position, I would have gone stopped out here. Then after seeing this double bottom and support still being rejected, I would have also probably bought somewhere along this double bottom range down here.
Yeah, I get you. I just wanted to make sure. Yeah, I see where I went kind of like where I could improve.
This is two separate trading days. This is Asian. Then over here would have been the next trading day.
Yeah. Yeah, I was in the trade for like a day or two.
Yeah, but even then, if you look at New York, like New York, it pulled back and then it continued to trade higher.
Mm-hmm. Yeah, I got you.
There would have been multiple opportunities there. And if you look at it here too, like you have the break of the highs here. Notice how clean it came back down into this area. In this situation, for sure, I would be paying attention to a 15-minute time frame, along with a 30-minute time frame. Sometimes in a situation like this where price comes all the way up and then closes above the highs, I would have potentially taken an entry right here, right when this bearish candle closed. Definitely a low risk entry, like maybe 1%, and then another entry after this engulfing here for this clean break and retest. That's how I would have traded it, especially rejecting the moving averages and then the double bottom break of structure. We have the break, the retest. I mean, you can even pull a fib from this point to this point, and price pulled back 618, closed above the 50. It depends though, because gold is in a very choppy area.
Okay, I got you, bro. Thank you.
Yeah, bro.
Hey, Raul, quick question, bro.
Yeah.
We all talking about getting the bag, man. I'm trying to keep the bag, right? How we avoid these taxes? Like, what's the way we avoid these taxes? The NFT way? Is it the crypto way? How we keep our bread?
I try and stay away from like tax questions because I'm not a tax attorney and I don't want anybody to get in trouble because I may do things a certain way. But when you trade on an unregulated brokerage, all I could say is that the gains that you make on an unregulated brokerage can't be really seen unless you put them into your bank account, which would be a different story. Ledgers are cool, you know. I'm not saying anything, but ledgers are a great place to store crypto.
The same thing I asked yesterday, brother. The same thing.
Yeah,
got you.
It was
okay.
Yeah. So I'm probably gonna end the webinar here in the next 5-10 minutes. Anybody else?
I have a question. So this is completely unrelated to trading, but I messaged you because I never got my credentials for the account.
All right. Send me an email.
Send it to you like through the.
Yeah, just send it to me on Discord. I'll forward it to.
All right, for sure. Because I went on the website and every time I don't need help.
Did you check your promotions?
Yeah.
You checked your spam?
Yeah, I checked all that.
All right, then send me your email because I was told all the credentials were sent out yesterday. I don't handle that department directly.
Yeah.
That's what I was told.
All right, I'm just making sure because I spun the wheel.
Yeah, just.
Spun the wheel.
Text me your email.
All right, I will. Thank you, bro.
You supposed to tell him spin it again.
Nah, I mean, I'll spin it again as long as there's still one of those $4,000 accounts still available. Shit.
Nah, hit it guys with a bing bong. Fuck your
Bing
life.
bong.
Anybody else have any other questions?
Yo.
It's good, bro.
Hey, what's up, bro? If I enter my trade on the 4 hour time frame, on what time frame should my support and resistance be at? Daily, right?
No, 4 hour time frame.
4 hour time frame?
Yeah.
Okay, so if I enter the trade on a specific, then my support and resistance should be on that time frame.
Yeah, because the 4 hour time frame, you're gonna find major levels.
Okay.
You could target them on the daily also, and take a more aggressive entry on the 4 hour time frame. Could do that.
Okay.
Yeah.
Okay, bro. I appreciate it, bro.
Yeah, of course. Okay, cool. Any other questions?
Yeah, I got a question. One last question, bro. Do you still use equal measured moves as you take profits, or you just solely go off support and resistance now?
I try and just do zone to zone as best as I possibly can.
Okay, got you.
Any other questions?
I got a question. For entries, do you wait for like market structure or just basic, candlesticks?
Both.
Oh, okay.
It's not about the what, it's about the where.
I mean, like that entry you took on that 30-minute on GJ, you just straight saw like
That was market structure because it was support and resistance right there, right here.
Oh, okay. But like when you went down to the 30-minute, like there was another what is it called? That's not a bullish engulfing, but
a variation.
You see that morning star though? Yeah, right there. Why'd you not take it there?
Look at the time.
Oh, okay. All right, I see you on that.
Yeah.
I appreciate it.
All right, cool. Any other questions?
Nah,
you guys are good? All right, cool. So I'm going to stop the recording now. So I'm going to have this on the course probably.